Okay, everybody. Well, hey, we are back for our next session here on Note Camp. And as I mentioned before, our little break, for many of you, this will be the most impactful session that you'll walk away like, oh my gosh, I got to do something. And we asked, obviously, if you had an LLC or don't have an LLC, so you're like, I'm starting there. Yes, I've got one. Then I asked kind of meetings, when the last time you updated your meetings or your quarterly stuff, and people like, no, never when I started, don't have to. But we are excited. We'll cover that a little bit later on, but we're excited to have the man, the myth, the legend. The guy's probably sat down with more entrepreneurs, helped structure more entities, more reviewed more businesses than I can probably think of. Brent, you've been at Laughlin Associates, going on
32 years?
32 years. How many businesses or entrepreneurs do you think you've talked to in that time or structured?
The last time I looked, I can tell you my name is probably on the initial formation page of over 100,000 entities.
100,000 entities. Wow. Good stuff there. Well, you guys at Laughlin do such a tremendous job for our students. You guys work with 95% of our mastermind and coaching students out there. And I think you probably got a presentation there. Normally,
I have a presentation. What's our time frame? I did not look at the time frame.
You got an hour 15 to an hour 30. We got a 15-minute buffer spot. So
I cut some slides out of this presentation to make room so we don't go over what Kevin's going to cover after me.
Okay.
So we will have plenty of time for Q&A, which I think for some people that might be the most valuable.
Yeah.
Just so everybody knows, the presentation I'm going to do today, I tried to tailor it to what I thought most of you would be interested in. So we're going to be heavy on LLC, but it doesn't mean that corps aren't good.
Right.
We're going to talk a lot about the LLC in the note world or in the real estate world, but it doesn't mean LLCs aren't good for general business either. I just wanted to tailor it a little bit more to probably what you guys are interested in now. Q&A we can go into if you have an operating business, and a lot of this stuff, it's universal across whether the LLC is doing real estate notes, it's an operating business, or maybe even just a hobby. So
right.
Just because we're tailoring it to something doesn't mean there's not more to it, and we can cover that in Q&A. Let's get up the presentation.
There you go, guys. Brent just talked. Usually when we have Brent spoke last year on our note camp last year as well, when we were talking about commercial. He's also a regular fixture at our masterminds, talking with our students, talking with our one-on-one students about setting some stuff. I don't even know some of your already existing clients on here.
I noticed Donald was on there. So Hi, Donald. I thought you were in San Diego.
I don't know. Maybe they're watching from San Diego. Who knows? So Brent, what we'll do is I'll moderate questions, but we'll probably most of the questions to the very end. If you have a question, feel free to type it. If it's relevant, I'll jump in and ask you, but we'll leave a lot to the very end. How's that sound?
And the way it's designed, moving a section of that stuff, there'll be plenty of time for Q&A.
Yeah, exactly. Cool. Take it away.
All right. So Scott introduced me, Brent Buscay with Laughlin Associates. Like he said, I've been doing this for a little over 30 years. Kind of my niche in this is working with individuals, making sure they're in the right structure, or more importantly, as you start to grow, that's where I typically come in, help you decide how do we grow, what has changed in your life, and what are the proper steps to protect or maybe even plan for exiting. In the end, making sure you have the right vehicles and things are working properly. And for some reason, the slide doesn't want to change on Zoom here, so we have to do a little differently. Laughlin, we're not a law firm. I am not an attorney or a CPA. Just want to remind anybody, anything that I say, you can feel free to seek legal advice or accounting advice. We do work with attorneys and CPAs. We have attorneys and CPAs. If there's ever a question that needs to be answered that's a legal or accounting question, we do have them. I am not one. I do not have scaly skin, so I'm just a normal Joe, just like everybody out there. Laughlin, we have a lot of services that we provide. Today, we're going to kind of just keep it to LLC incorporation information. So we form LLCs, corporations in all 50 states. We do lawsuit protection, estate planning, corporate compliance services. And when I say corporate compliance services, that also reflects LLCs. We'll cover that fairly heavy today. We do trademarks, and we have a great referral source of just business needs. So we're kind of a one-stop shop that can make introductions to the appropriate party if it's something that we don't do. When we're talking, with what, Scott's presenting to you guys, a lot of times we're going into these investment blind. We don't necessarily know what to do, what are the steps, what are the tools that we need. And that's what we'll try to cover today. Everybody out there, I'm sure everybody on, that's listening today, we want to add more income. We want to remove ourselves from our day jobs if we have day jobs. We want to bring in that residual income to prepare for retirement, or just even have a better quality of life, for our families. But we don't always have the right tools or the right team. I like to say, you're only as good as your team. And we, as a small entrepreneur, you can't go out there and hire team members. It's just not realistic. So be able to surround yourself with experts, and to be able to, avoid the pitfalls and the mistakes that we make just trying to navigate the business world. When we talk about why an LLC or why a corporation, in this slide, real estate is a magnet for a lawsuit. If you're a landlord, if you're fixing and flipping houses, you will be sued. It's not if I'm going to be sued. You will be sued if you do it long enough or you do it big enough. It's going to happen. So how do we prepare ourselves to either eliminate lawsuits, mitigate the damage of the lawsuits? And that's where the LLC or a corporation comes into play. We can get into an argument, why am I going to form an LLC or a corporation? Is it for tax savings or is it for asset protection? Both of these vehicles were designed to provide asset protection, to protect you from the world, you as an individual. So that was the main purpose of why a corporation was created. And it's the second, then behind that, hundreds of years later, it's why the LLC was created, was to give liability protection to the individuals. Not discounting tax savings. These vehicles are very good for tax savings. If you're working with the right tax professional, it opens up a ton of deductions that you couldn't take. But we're going to really kind of just stay with the asset protection. And it's why these entities were created, was for protection, protecting yourself. We got a fancy dressed Robert Redford over here. How do people see you? If you are a business owner, the average person always thinks business owners are rich. Very far from the truth in a lot of cases. I know a lot of business owners that have employees that take home more than they do while they're trying to grow their business. But typically, as we grow our business or we grow our note portfolio, we start to make more money and we get nicer things, nicer cars, nicer houses. It puts a target on our back. So again, why is it important? As we start to get nicer things, as people start to see us in a different light, and whether it's true or not, we want to protect ourselves. We want to reduce that incentive to be sued. Again, an LLC won't stop you from being sued. A corporation won't stop you from being sued. But how can we reduce that incentive? By putting a proper structure in place is the best way to reduce that incentive. If I'm going to sue you as an individual, it opens me up to your W-2, garnishing your wages, seizing your assets. But if I'm forced to sue an entity that's already It's already a disadvantage. I don't want to sue an LLC. I don't want to sue a corporation. I'm going to be limited to potentially what I can get. And if structured properly, might not get anything or might have to wait a long time to be able to get something. That's a very easy way to put that first hurdle in and make somebody say, hey, do you have insurance? Yes, I do. Well, let's settle for the insurance. Why investors use limited liability companies. Again, this is universal for corporations also. We do it for asset protection, tax savings, protect against creditors. It's a great estate planning tool. Prestige and credibility. We don't think of that a lot, but you know, as you guys get more advanced into your note buy-in and you're out there soliciting and looking for notes, or you're looking for potential joint venture partners and things like that, when you have the ink behind your company name or the LLC, it does give you some credibility. It shows potential people out there that you have taken the necessary steps, and it puts you up on a pedestal a little bit. I rather deal with a company that's incorporated or that's an LLC than maybe a potential sole proprietor. Why? Because I think it's just natural instinct. It's a corporation. They must be big. They must be, you know, well established. They know what they're doing. And last, partner protection. When we use LLCs and corporations, you're protected from your partner, and your partner's protected from you. And we'll go into that a little bit later on how that happens. But this is why the LLC was created. Is you had a lot of partnerships out there with no liability protection. So one partner brought liability, it could affect all of the partners. This is how the LLC was created. Was we need a way to protect each other within inside this business, so one partner is not harming everybody. Limited liability company, again, liability, only risk your investment. And that's kind of a double-edged sword. That's not always necessarily true, but if worst case scenario happened and we were to be attacked in our LLC, it's structured properly, it's maintained properly, we're not going to be liable as individuals. So our personal assets are protected. What's at risk is the distributions that are made to the members inside of the company. It's controlled by members. You can have a single member LLC, which is you. You can have multiple members. So a partnership would typically, you know, me and Scott are going into business together as an LLC. We are both members, and we both have control as the members. The amount of control we have is based off of your percentage ship. If I have 70%, Scott has 30, obviously I can override him on decisions, but it doesn't mean I can take away money from him. Scott's still entitled to 30% of the proceeds of the company. It just gives me controlling membership. Something that I like to always remind people, how do you want this partnership LLC set up? Well, 50-50. Well, if it's your idea, you have the stronger voice. I would always say, no, I would never enter into a 50-50 partnership unless I had to, or I really wanted to. I would always want to maintain some type of control and at least be 51% controlling member. Taxes. The LLC became favorable in the tax world because it could be taxed as a pass-through entity, where any income that's derived passes directly through to you. The LLC doesn't file a tax return. You declare the income on your personal tax return. You could be taxed as an S Corp, you can be taxed as a C Corp, and you can also be taxed as a partnership. So very flexible. Exit must get approval from all members before selling the interest. So that is really depends on how your operating agreement's written. We'll talk a little bit about the operating agreement, but that's one of the things that I see most single member or small LLCs do not have is an operating agreement, which if you do not have an operating agreement, you do not have an LLC, you registered with the state and you are paying fees, but you are afforded no protection because you do not have the pieces in place to be afforded the protection, and potentially even in a tax audit, all of that could be disallowed because you do not have the proper pieces in place. Charging order. This is where I said we'd get a little bit into how necessarily assets within inside the LLC aren't at risk. We have charging order. Some states have stronger charging order. We call those preferred states. Almost all 50 states now have some form of charging order. A charging order is very, very big in why an LLC is so attractive. And an example of that is we're buying some notes. We have to foreclose on a property, and the previous homeowner now sues us for foreclosing on him. He is not necessarily going to get into our note portfolio. He's not going to get into our assets. If he wins a judgment against us and is awarded in a judgment, and we'll say hypothetically he was awarded $100,000, he is entitled to the distributions that are made. So if this LLC is just you and you are not making distributions that year, then they would get no money. The next year you make more investments, no income coming in because cash is going out and making more investments. There's a second year you did not take distributions, they do not get a penny. Third year, fourth year. Now, when a litigating attorney goes after an LLC, they are aware of that. So how attractive is that to when you want a judgment, but it could be years before you see a penny, maybe a $20 distribution or a $1,000 distribution was made, so they would get $20 or $1,000 chunks here and there as it was relevant. So that is one disincentive of suing an LLC. I could wait years. There's a lot of companies that run on a very, very low profit margin, so distributions aren't made. So in these cases, this is a great tool to use to settle for an insurance settlement or to settle for pennies on the dollars to negotiate. When you're suing a company, you're not allowed in depositions to ask about their assets, their income, and things like that. When you're in a trial, you cannot get that information. So if you have a good attorney, he's objecting, that's not relevant, it's not relevant. When do they get to find out what assets are in there, how much money, what's going on? That's after you win a lawsuit and you go to the debtor's exam. That's when you can ask these questions. So if somebody's going to sue you, especially if it's frivolous, they're going into this blind, not knowing what type of assets there are, what type of income there is. So they're going to gamble that they're going to pay $50,000, $250,000 to go to trial for a gamble. So this is one of the main points that makes an LLC attractive and takes the incentive away to sue an LLC. We talked about operating agreement. So there's formalities that we must take when we set up a company and also to maintain it. So the steps anybody can go to the Secretary of State where they live and file for an LLC. In most cases, it's pretty simple. There are states that it's not as simple and you're just guessing what questions or what am I supposed to be putting in these boxes. That's the first place we see a lot of people get into trouble. They didn't know what they were doing and they just guessed what they were putting into the boxes. A lot of times when we're doing a kind of just a review of people's LLCs or corporations, we ask them, are you a member managed or manager managed LLC? I don't know. Then they ask, where would I find that out? Some states require you to outline it when you file your articles. It's member managed or manager managed. Some states don't. So not knowing what you're doing could be very detrimental because you don't know what you have. And then when somebody's trying to help you figure that out, you don't know what you have. But the operating agreement is really the nuts and bolts of an LLC. It explains who the owners are, what the LLC can and can't do, how do you dissolve it? How do you sell membership shares? So it is the very first piece of information that after you form an LLC at the state, you create your operating agreement. And it's one of the things that we see, I would say maybe about 40% of do-it-yourself through LegalZoom and stuff. People do not have their operating agreement. They either weren't provided for it, or they didn't know they need it, and it was some email that was dripped with 100 other emails that they discarded. But it's one of the main pieces that you need for your LLC. Liability goes both ways, and the next couple slides will kind of how to separate your risk. But if we drew an imaginary line down this slide with the right side, your current assets, that's you. That's your current house, your children's savings. Husband and wife are both W-2 wage earners. It's your wages. You want to separate that from this business world, whether you're a new investor or an existing one. We want to put that separation in. So how do we do that? And that's where the LLC or the corporation, whatever is, the right vehicle for what you're trying to do. That's where we make that first separation. We insulate and shield. All the whole game is we always want to build this, fortress. How do you build a fortress? One brick at a time, but we got to start somewhere. So we want to always, if we're a landlord, we want to separate ourselves from our property. If we make investments, we want to separate ourselves from those investments. If we're running and operating a business, separation. And we can do that by adding multiple entities. Sometimes you don't need multiple entities. Sometimes it makes just sense to do that. And I like to say it's what is business sense? What's going to hurt my pocket, my way of life, or my goals? That's when we start to separate and put our eggs in different baskets. Most of you, if you've never been sued, you won't relate to this. For those of you who have been sued, you'll relate to this. Everybody handles lawsuits differently. I have seen a lot of people for very small lawsuits. I'm talking somebody who was sued for $10,000, literally shut down, stopped doing business, ended up getting divorced, wasn't eating, their health was deteriorating over a simple $10,000 lawsuit. So whether it's small or big, it affects people differently. But if you know you're protected and you're foundationally sound, it does give you an ease of mind if a lawsuit happens. I mean, it's first time, it's scary. You don't know what to expect. If you've been doing this long enough and you're in a high risk business, then you start to understand most of them are frivolous. Most of them are people just trying to get a piece of what you have. And if your structure's been tried and tested and it's held up, it does give you that peace of mind to just know everything is taken care of. When we talk about separation, this is kind of where if you go and shop around to multiple asset protection advisors, you will run into a lot of groups out there that are out there to sell you just 20, 30 LLCs because you have 20 different things going on. That is not always necessary. We don't need to overcomplicate this structure but we do want to make a decision of when do we separate our eggs and put them in different baskets. Properties. I have 3 properties. Do I need 3 LLCs? That depends. If I have a property in Alabama, I have a property in Tennessee, and I have a property in Illinois, do I need 3 separate LLCs? No, you don't. Would it be smart to? Yes. And the reason why is if you started out with Alabama, so you had an Alabama LLC, then you went to Tennessee, now you have to take that Alabama LLC and foreign qualify it into Tennessee. Once you do that, you are subject to Tennessee law. Now, if we took that same thing and we went to Illinois, now we're foreign qualifying it there. So if an action happens in Illinois, it's putting our Tennessee and Alabama properties at risk. So would it make sense at that point in time of maybe having an LLC for each of those states? It probably would. Does it mean that if we add another Alabama property that we need to get another LLC? We might want to, but most likely, maybe we put $20,000 down on a $100,000 property. We're into it for $20,000. Let's lump a few Alabama properties into that Alabama LLC. If we had a $22 million multi-unit complex paid off, and then we bought a single family home at $60,000, would it be wise to separate those 2? Yes, it would probably be wise because we have a high asset property that we don't want to really mix with this low asset, low income property that's being rented through HUD or something like that. The same can go for notes. How do I want to put all of my eggs in a basket? No, you don't. What is your comfort level? Worst case scenario happened, somebody was to be able to pierce through this and they took $100,000. It would suck, but it probably is not the end of the world for somebody young who's starting out. Maybe somebody who's older at the tail end, maybe that $100,000 loss would be devastating. So would we want to separate it there? Yes. But separating these assets and mitigating the risk is another way to provide this type of protection. We got 3 LLCs here: investment property or notes, investment property or notes. That's again where you decide how much it is. Do I want $1 million of notes in each entity? So I hit $1 million in this one. So now I'm going to go form another entity and my new notes are going to start there. I hit $1 million there. I go to my next one. And so it's a financial decision that you need to make personally based off of, if this thing got attacked, worst case scenario, it was pierced for some reason and they were able to get to the assets. What is that damage? Where is your risk level? Nice thing about this, if the first bubble got attacked, the other 2 are off the table. They're not related. So we don't have to worry about these other 2. They're functioning, they're safe. We're just worried about the first LLC that was attacked. There's multiple ways to structure this, and I'll do some hypotheticals, but this is where during the question and answers, or if you wanted to call in and speak with somebody, this is where we can decide, how do we do this? So I talked about some preferred states. You have Nevada, you have Wyoming. In some cases, Delaware makes sense for us small entrepreneurs, and in some cases it doesn't. But how can we put another layer between us and the risk? We could put another holding company there where we create a company. Now we don't own the underlying LLCs, that company does. Using preferred states, Nevada, Wyoming, and Delaware, that would potentially cause somebody to have to now go to another state to file suit against the holding company. Might not. It might draw that holding company into the state that that was being sued, but you're putting another layer of protection in there. We could strike this holding company and change the wording to management company. Maybe I want to consolidate all of my income because I've grown now. I have, an operating business that's generating revenue. I got rental properties that are generating revenue. I got a note business that's generating revenue. So how can I consolidate that and roll it up to make it tax manageable where I could take advantage of the best tax plans and strategies out there? I can create a management company and consolidate all of my revenue into there. And that's where I decide what type of perks I'm going to provide myself. What are we going to do to mitigate this tax damage? I'm a high W-2 wage earner. I don't need to be put into a higher tax bracket just because I don't know what to do. So we can use a management company in there. We can also use a management company maybe to siphon some of the risk from the underlying entities also. So there's multiple ways to structure these. This is where I think I was telling you in the beginning, or I was telling Scott, Kevin Day is on after me. Kevin Day is going to go into how to own nothing but control everything, or how to protect. We've made it. We're successful. I have $1 million equity in my house. I have $3.5 million equity in my rental properties, and I have $1 million in performing notes. We have structures there that, one, we could do something simple like this where we've eliminated ownership. You no longer own anything underneath the trust, but you still control it. So if you are sued as an individual under the letter of the law, state law, federal law, using the proper trust and the proper tools here, you can say, I do not own any of that. That's very powerful. If this thing was wound down, all of the stars aligned and a judge ruled that this was not going to hold up, you still are not the ultimate owner under federal and state law. The trust would be. So again, protecting yourself. That is one example of doing a structure like this. There's multiple ways of doing this. This could be flipped. So instead of the underlying entities being here and the green box being a holding company, that could become a lending company that lends to your businesses, and in lieu of giving you a line of credit or a cash loan, they're going to secure the equity. They want to secure their investment. So they're going to file deeds or UCC1s to protect those assets. And if they're a first line creditor, if a lawsuit happened. So I just wanted to tease a little bit. I had the whole Rockefeller strategy in here, removed it. Kevin Day will be talking about that later. So for those of you who have assets, who have something to protect, that's a very, very strong tool to truly provide yourself asset protection. It's the only way to have pure asset protection. Why we're here, we have a trust here. There's multiple types of trust. We have a living trust, which hopefully you all have living trust. Everybody should have a living trust. A living trust does not provide asset protection. It avoids probate. That's why you do a living trust. For everybody in the Midwest and in the East, you guys have probably heard of land trust. Land trusts do not provide any type of asset protection. They provide you privacy. They keep your name off title. Land trust we use strategically, but land trusts are misused all the time. For people like Scott who live in Texas, Texas has cracked down on land trust considerably because they are mismanaged. Land trust holds a piece of property. You have a trustee. Typically, you're a beneficiary of that land trust. So you're the benefit of the property it holds. If you're more sophisticated, the beneficiary is an LLC. But in a case like that, the trustee is supposed to be doing the work. The trustee is the one who's supposed to be calling for the repairs or making the payments. But what we see, that never happens. The trustee's never doing anything. It's you, the beneficiary, who's pulling all the triggers, doing the work, making the repairs, paying the bills. And that's where land trusts have been attacked greatly in Texas. Is not that it's a bad tool, it's just been misused. We've, this scale is, just kind of balancing, to how do we weigh our risk? And we've been talking about that quite a bit. That, I can't tell you what your risk level is. I can walk you through it and we can play hypotheticals and stuff, but that's something that you kind of need to decide in any structure that you're doing, or for those who choose not to have an LLC or corporation who goes at it as an individual or a sole proprietor. You have to weigh the risk of what you're doing. If you decide I want to be a sole proprietor, is saving $1,000 to be a sole proprietor worth the risk of being sued as an individual? I mean, and if you answer yes to that, you're probably not prepared to do business. You're not there yet. Maybe you should, save a little bit more or plan a little bit longer. If you're a sole proprietor and you did business just because you didn't know the risk, that's a different story. But once you kind of understand the benefits of an LLC or a corporation, I mean, it really should just be a no-brainer that that's the vehicle I want to use. Whether it's one and we're going to do multiple things through one, but at least we're having some layer of protection, or if we use multiple entities. Asset protection starts with a strong foundation. We talked about this in the beginning. What is that foundation? Filing your articles with the state. That's your first step. Getting your operating agreement. And then we want to be able to prove to the courts that this is a real business. This business is not me. I'm not this business. This business is not me. We want a pure separation, and we want proof that we're separating ourselves from that. Another thing is to get the tax benefits of being in business. You have to have the proper foundation and everything in order. Here's just a random list of stuff, that are tax benefits: accounting fees, advertising, air conditioning, airplanes, boats, bonuses, bookkeeping, health clubs, travel, equipment, seminars. All of that is tax deductible if it's for the right reason, you have the right formation, and you are keeping track of it right. One of the things that that I see a lot of times is somebody will come to us, I have this LLC and we just paid $1 million in taxes last year. And that's not, that's not everybody pays $1 million in federal taxes a year, but it's not as abnormal as maybe it was 20 years ago. You're seeing more people with taxable bill, paying the IRS that much money, $500,000, $100,000. And a lot of times they're not working with the right, tax planner. They're working with a CPA. Most CPAs, what they do is they'll plug the numbers into their computer, they'll spit out, and they'll tell you how much you have to write a check to. You want a CPA that's a tax planner or somebody that's going to work with you to plan for these. There's so much you can do out there to provide benefit to yourself now or benefit to you later that people miss, or they're not allowed to because they don't have the right structure or the right documentation to back it up. Big benefits equal big responsibilities. And the responsibility we're talking about is you made the step to form an LLC, but you're not being responsible in treating it as a separate business. It's separate from yourself. You're not doing the formalities. You filed with the state, you pay every year the fees to the state, but that's all you're doing. You're not taking on the responsibility of the maintenance or the housekeeping that needs to be done in an LLC or a corporation. Biggest mistake company owners make, failing to separate themselves from the business. They use their business account as a piggy bank, or they're using their personal account to pay business expenses. They're commingling the funds. You always want to have a clear separation. The LLC has a bank account. Business expenses are paid out of that. You have a personal account, you pay your personal expenses out of that. You don't want to commingle those funds. If you did, you want to document why. You know, if I am out traveling and I use my personal card because I left my business card at home, it's not the end of the world, but I'm going to document that. The company's going to reimburse me for those expenses, and I'm going to write a resolution stating that I use my personal card, and the company is to reimburse me for these expenses. So I'm going to document it and put that paper trail. Maintain your proper documents and meet legal requirements. Another thing I think a lot of you might be shocked about is somebody calls me, do you have an LLC? Yes. How long have you had that LLC? For 10 years. I go look at the state and it's been dissolved for the last 8 years. They failed to maintain their company at the state. They didn't pay their state annual renewal thing. They didn't file their franchise tax if you live in a taxable state. They're not meeting the requirements, and it's very, very common for somebody to come to us, tell us they have a corporation or LLC. We do a little bit of research, and it hasn't been in existence for 1, 2, 3. We had one recently that it was a 30-year-old company, and it has not been in existence at the state for 20 years. So, and they just didn't know that, you know, we filed it. Somebody dropped the ball. Somebody forgot to tell us. It was the responsibility of my secretary. She's supposed to be doing it, and she hadn't done it for 20 years. Biggest mistakes company owners make is commingling funds. Keep personal and corporate funds separate. Document all transactions between stockholders and officers. So again, financially, we want the separation or we want documentation. This also comes into play with a partnership, right? I've seen partners fighting over, you've been paid, I haven't been paid. Well, if you clearly state what the financial agreement is between you guys in the beginning in your operating agreement, and you document these transactions, the salary taken, the perks, the dividends, whatever, it takes away the ability for somebody to sue you, or if they do sue you, a partner, that you clearly have everything documented. I've seen just recently, a good friend of mine went into business with another friend. They got into a fight over it. They're trying to separate the business. Have access to me, know what to do. They did not ever document their ownership of this company. They went to court. The judge basically said there is no company. You never did any of the documentation, and just forced them to split the assets equally down the middle. And the one partner was into the company for $1 million of his own personal money. The other partner was into it for $100,000. He ended up getting the same benefit as the guy who put $1 million into the company. So again, documentation. Failure to be signed on behalf of the corporation or LLC. When an LLC or a corporation enters into a contract, an agreement, a lease, anything financial, you want to sign with your title. So it could be, you know, signing as Brent Buscay, manager of ABC LLC, Brent Buscay, member of ABC LLC, you know, Brent Buscay, president of ABC Incorporated. You always want to sign on behalf of the company and not as an individual. And the reason why is, if let's say you entered into a lease and you're sued because you know, bad times, you're not making any income, but you have 3 years left on this lease, they're going to come back and sue. They're forced to sue the LLC. But hey, you didn't sign this lease as an LLC, as the member or manager of the LLC. They have a good claims to say, I didn't know we were entering into an agreement with a LLC. Look, they signed as an individual. And what a judge could do is say, we agree. we're going to set the LLC or corporation aside, and you could proceed to sue this person as the individual responsible party. That is, so a very simple thing we sign with our title that we have within the company. Always use your title. Here's an example by Aaron Young, president. So if Aaron is ever out there entering Laughlin into any type of commitment, Aaron is always signing Aaron Young, president. Failure to identify as a corporation goes back to my example earlier. We didn't clearly let this person know that we are a corporation or an LLC when we entered into this agreement. The agreement is not going to be between me, an individual, and the person who's leasing me the property. It's going to be between the landlord and the LLC. That's who we're going to list on there. Who is guaranteeing this, or who is the responsible party? It's the company. It's not you as an individual. Not keeping the corporation in good standing with the states. That again, we hammered on this a little bit. Every state, well, I won't say every state, most states require some type of annual filing. They're usually minimal fees, but they're looking for a fee, and typically a form just reconfirming you're still the responsible party, this company's in business, and you're paying the state the fee. If you don't pay that fee, then the company goes, there's different verbiage for different states, but it will go into a delinquent status. And then typically after a year or two, it will go revoked, which means it doesn't exist any longer. Some states you can revive a company if you forget, you forgot for 3 years, you can revive it, bring it back current. Some states have cutoffs of, oh, it's been 2 years, this company no longer exists. So you have to either reform it or maybe somebody can steal your name at that time. Maybe you have a really good name, somebody watches it, company goes in bad standing at the state, now they can steal your name from you. If your company is not in good standing, if your company is delinquent and you get sued, you have no protection. You are liable for all of the business dealings and all of the debt or liability. The company no longer is there to protect you. Putting your head in the sand, right? What do we do when we don't know what we're doing? A lot of times we ignore it. We don't search out the problem, or if we're not sure, we just put it to the side and we go and do what we know how to do. Buy notes, sell properties, whatever it is. So do nothing. So if you don't understand, you're not sure, that's where it's important to have the good team on your side. Somebody who can guide you in the right direction, so you are doing something about it. Failure to follow the rules will leave you personally exposed to the liability and tax penalties. And that's, you would not think this would be so common, but a lot of times, when does somebody reach out to me? When it's too late. Their company was not in compliance, non-existence anymore, and now they're asking us to fix it. Well, at that point, the typical answer is it's too late. You need to deal with it. Sometimes there's things we can do, or we can help, navigate it and soften the blow. But, it's important to stay on top, to do it right, and have everything in place so you aren't personally exposed to the liability. If your corporate records are not in order and you're sued, you could be stripped of your liability and tax protection. We're going to go a little bit more into the compliance now of what you should be doing. But I mean, those are two huge problems of not maintaining your entity, losing the liability and the tax benefits. Very rarely would I ever talk to anybody that those are not the top two reasons they formed an entity. I don't want to just have an LLC so I could say I'm the owner of an LLC. It needs to do something for me. And these are the two top things why we form these entities. If you fail to keep your proper corporate records, and if you are ever sued, you have a 50 to 94% chance of losing your personal assets in order to satisfy a judgment. That's from Cornell Law Review. if you look at all case law, almost every single instance of an LLC being pierced or set aside is because of lack of corporate documents, lack of minutes, lack of resolutions. You would be very hard pressed to find an LLC that was set aside other than that reason alone, unless there was fraud. You know, fraud is always going to set everything aside if you commit fraud, but almost all case law against an LLC being pierced is lack of corporate documents. What do you do to protect your benefits? Document, document, document. Minutes. So every year at least, state law requires you to do annual minutes. LLCs were very attractive because they didn't have the heavy burden of a corporation, where corporations were doing minutes and resolutions for everything. That's what made LLCs attractive. So some states still have on state law that you don't have to keep resolutions for LLCs. There's a couple different things when a lawsuit happens. We have state law. Did we violate any state laws? And then we have case law. And so what happens is attorneys are on both sides are looking at case law. Defense is using case law that if you do this, this, and this, the entity should be protected. The litigators looking and saying, where are the weaknesses and what, okay, here's a case. They didn't keep minutes and resolutions and it was set aside. So they're going to bring that case in front of the judge as an example of, you didn't do this. State law says they don't have to, but case law and precedence says you do. And the judge is usually going to rely on case law and precedence. And it makes his job easier because another judge has already ruled and deemed it legal or not legal, or proper or not proper. So minutes are required for LLCs and corporations in all 50 states, and it is also required by case law. Resolutions really are just a permission slip. I want to go and JV with Scott Carson. I'm going to write a resolution saying the LLC is in desire to JV with Scott Carson to purchase $100,000 in notes. I'm going to write a resolution because I want to lease a property. We're going to do a resolution. I'm authorizing the manager to go look for a building. We are in the need of a commercial space to, to house our business. We're going to write resolutions for, high expense stuff that could be, get us into litigation and stuff. And this is another area where we separate ourselves. This is, it sounds kind of ridiculous. It's just me and the LLC. Why do I have to write myself permission? Well, your company is giving you permission to go and engage this. This is how you prove the separation. These are the formalities that separate you from the entity to afford you that protection, or even tax deductions if you were ever audited. Here are some of the things that we write resolutions for.
This is always the most interesting slide.
And it goes and goes and goes. I'm glad I didn't have to write all these down. But I mean, you can see if you were just paying attention to some of the resolution examples here. If you say I don't need resolutions, you can't tell me you haven't done any of this stuff. Did you pay yourself a salary? Did you take a loan? Do you have a company cell phone? Are you taking a home office deduction? If not, you should be if you're working out of your home. These are what we're documenting. These are what separates you to show that the company's been thinking for itself. And these are your permission slips to go do it. Why did you go and enter this lease? Well, I didn't enter the lease for myself. My company asked me to go do this. This is how you protect yourself. This is how you show to the courts that you are a legitimate business and you're treating this company as a legitimate company. If you already have a limited liability company, we can help you there. We can go back in time, clean up all of the missing documents, bring you current, then work to keep you current moving forward. That we call that our corporate veil program. Once we get you caught up in that program, we reach out to you monthly. Scott, what have you done this month? Nothing. You didn't buy any notes. You didn't foreclose on any properties. I thought I seen you in New Orleans speaking. Did you document that you were traveling there? Oh yeah, so we kind of guide you through, and once you get comfortable and know how we're prodding you and stuff, you really start to know. And then typically at that point, you're firing stuff off to us. Hey, I went and leased a new car for the business because I needed a vehicle with better gas mileage to travel to look for properties or whatever. So those are the things that we help you do. We go back, audit it, bring you compliant, and then keep you compliant. We remind you of your renewal with the state and just keep your company on track. We maintain your corporate formalities, consolidate your records. That we have a record book. For those that don't have record books, we can provide you with a record book. It's a good place to put your articles, your operating agreement, your membership shares, your membership ledger of who you issued membership to. If you haven't done that, we issue membership for you. We help you get everything in place so we can continue to keep you current. You can track the history of your company. It gives you a nice organized way chronologically for these decisions that have been made. We store them electronically to you. It's how you keep from being pierced by the courts, IRS creditors, or legal nay-doers. I mean, this becomes kind of your Bible. If you've ever been audited as an LLC or a corporation, what's one of the first things they ask you? They ask you for your corporate records. If you hand them a well-organized, well-structured book and they start to go through that, they usually set it aside and that piece is off the table. If you don't have the proper stuff, then the agent's going to look, hey, I don't think they're properly structured. We can disallow all of these expenses they took and make it income and give you the penalty on that. So having a nice organized book, everything in order, is really a great way, to make an audit go smoother. If you were ever sued, to be able to hand that to your attorney and to use that while you're going through a lawsuit and everything's organized, it's done, that is, it's powerful. It's a deterrent when somebody who's trying to attack you, when they see that you have everything in order. The corporate veil will help you maintain and that everything is in good standing in the eyes of the law, not only at the state level, making sure your company's current, reminding you to keep it current, but having the documentation. Here's the third thing on here: be prepared for partners, capital raises, exiting your business. If you're adding a new partner and he wants to see your records, a lot of people cannot provide that. If you're trying to raise capital and somebody's looking into you, they might ask for they're going to be asking for documents. And if you're telling them, I don't have this, what do you mean? How do I get it? So it just, as you start to turn around the corner, take just a simple thing. You go to put a piece of property into your LLC. They ask you for your operating agreement, maybe a resolution authorizing you to do this, and you don't have it. It's going to delay, closing on that property or moving that property. So having everything prepared, so when you turn around the corner, you're not going and trying to scramble and figure out what I need. Having everything there to make the deal happen then and there is very powerful. This is a simple product. We have a a special for all of you guys out there. It's at www.corpvaleprotection.com. I'll leave this slide up. I also have people, if you have questions, want to sign up for the program, you can call the 800-648-0966. Monday through Friday, 8 to 5. Somebody is available. So if you want more detail or you want to get into specifics about other stuff, you can call the number or you can go to the website. If you don't have an LLC or a corporation, we are offering you a free formation for corporations or LLCs. If you enroll in the corporate veil, all we ask you to do is enroll in the corporate veil and pay the filing fees. We don't add any other fees onto that. So you're getting a free LLC or corporation. So if you don't have it, this is a great offer. If you need another one, here's another chance to get in on that offer. If you already have one and you just want to do your corporate veil protection, we can do that for you. And the price is $9.95 for the corporate veil. We'll go back up to 5 years of audit and service you for 1 year. On the website, we do offer a finance option too. So if you don't have $9.95 right now or don't want to put out $9.95, it's $255 down and $80 a month for 11 months. Those $80 a month payments do get reported to the credit bureau. So you are building some business credit if that's important to you. You know, it really depends on what type of business you're running. Some people it could be important, others, you know, I would take advantage of prepaying it and taking the discount. Prepay, like I said, $9.95, or we can do install $255 now, $80 for 11 months. If you wanted a new entity, then we would tack on the filing fees on there, which is minimal in most states. So that is something that we offer for the attendees of this event. That was it for the slides.
Can you keep that up a little bit longer there? That
Yeah.
last slide.
I thought there was one more page on that.
No, it's okay. There you go. Yeah. The corp veil protection. I put the link in the chat roll, everybody. Got a couple questions from folks here. Tamika asked, does the LLC operating agreement have to be notarized?
What? One more time?
Does an operating agreement for an LLC need to be notarized?
No, it does not.
Exactly. And here's the thing, ladies and gentlemen, if you're selling a piece of property, they're going to ask you for your operating agreement. Every title company is going to ask you for your operating agreement in your LLC. They're going to make sure to check that your LLC is up and running and good standing with the state.
Well, but here, go on to that. You've held this rental in this property for 20 years. You finally go to sell it, right? You're getting out of being the landlord, or you just want out of this property. You go to sell it, and the lender finds out that the company has not been in good standing for 4 years. What happens to that property?
It doesn't close.
Does not close. Yeah. You know, I see that probably 30 times a year, and it's usually for a long hold that they shut the company down themselves. They didn't forget. They physically, I don't need this anymore. I'm tired of keeping it. They shut it down. They go to sell the property, and now you have a huge problem because the owner of the property no longer exists.
Mm-hmm. Got a question here. Sam asked a question. I have 3 properties in Pennsylvania in my 401k. Do I need an LLC instead?
Yes and no. Would you be allowed to move those properties out of that? I'm assuming you have a solo 401k, is probably what type of 401k it is. You probably would not be able to move it out into an LLC now. That would be a question for your administrator. Hey, I want some additional protection because I don't want to put my whole 401k at risk. Can I move it out? The better solution would have been, at the time, this is for self-directed Roth, self-directed LLCs, solo 401ks, your solo 401k, your Roth IRA, your self-directed LLC could have formed an LLC that it owns and put the property in that to provide that insulation from your retirement plan. Now, in your 401k, you do have some ERISA protection. So you do have some federal law there that gives you some protection, but there has been instances where ERISA has been set aside and somebody was allowed to go after the assets inside the 401k to satisfy a judgment. But you do have some protections there. So I would ask your administrator, would you allow me to form an LLC that's owned by the 401k to put these properties in to provide another layer of protection?
Mm-hmm. Shelley asked the question here, would that corporate veil protection only include one LLC? I have two LLCs. One is a self-directed checkbook IRA LLC.
This price includes one. There is a discount for second, third, fourth, and fifth. So to answer your question, Shelley, if you wanted to enroll this in for one, it's $995. If you have a second entity, it's $595.
Mm-hmm. You have any opinion about checkbook IRA LLCs versus just a traditional IRA, self-directed IRA?
I love them. I love the flexibility of them, especially in what you do. I mean, there are times when you need to pull the trigger now.
Yeah.
If you go into a bank and he has some notes that he's willing to get rid of that you can get, how many people are behind you, right? And
yeah.
He's willing to say, hey, I'll give you these 10. There's some good ones, some bad ones, but you're buying all 10 and you're going to do it today. If you have to go back and ask your custodian to make a payment, right? Are they going to do due diligence? Do they want to know what each asset is? Do they want to see workups on that? So, hey, I'm behind you. I got cash. I'm taking them from you. Self-directed LLC with checkbook control. What do you have in your hand? Your checkbook. Yeah. You know it's a good investment. You write that check. Another thing is, do you have to ask permission if you wanted to go buy a rental to form an LLC to put that rental in that is owned by your self-directed LLC? No, you don't. You do it. So you're not asking permission. You're not being nickeled and dimed, every time you turn around the corner. The thing I can tell you about the self-directed LLC, it's very, very important to have the corporate compliance. You want it spot on clean. You don't want to commingle, because what happens if you get caught commingling?
You lose the protection of all of it gets taxed too. Yeah.
You're getting taxed right then and there on all of this. Penalties, self-directed LLCs, I love them. I think they're great. I don't know why everybody doesn't do it, but you want to make sure everything is extra clean, because the financial ramifications of it being disregarded and being penalized could be huge.
Mm-hmm. Norm asked a question: which entity would you recommend it's best or correct for the business that is selling the time of the principal, like consulting or project management, et cetera? S Corp, C Corp, LLC, what would you recommend?
That's an open-end question. For something like that, I'd probably do an LLC. Depends on the revenue that's coming in. I'd probably have it taxed as an S Corp. Reason, the very simple reason is, let's say it earns 100,000 in the year. A reasonable salary is 50. So I'm going to take a $50,000 salary, a $50,000 distribution. I'm not paying self-employment tax on the 50,000. What did I just save myself?
Yeah.
Now that rule, that 50-50 rule it's not the rule. Your compensation has to be reasonable for the work you perform. But that's just an easy example. If you can save 15% on $50,000, why not have it an LLC taxed as an S corporation?
Mm-hmm.
Now, if I was in a very high liability, I'm transporting hazardous chemicals, I'm going to probably go with a corporation over an LLC. Why? Because there's hundreds of years of case law instead of, what are we at? 30 years now, 34 years of case law. So very high liability, I'd probably lean over to a corporation. 20 years ago would have said corporation because LLCs didn't have case law, backing them up, especially if it's a single member. Nowadays, if you're doing the proper documentation, I'm not afraid of a single member LLC.
Mm-hmm. Wayne asked a question. Can you change a single member LLC to a multiple member?
Yep.
Do you need to pay a salary? Can you do it in a single, or must it be a multiple member?
No, you can pay a salary to a single member if you elect to be taxed as an S corp. Now, and just to further answer that question, if you wanted to sell one share for $1 in your LLC, are you a multi-member company now? You maintain 99% control. You gave 1% to somebody for $1. You are a multi-member. So it goes off of when we talked about issuing membership shares, which that's the first one of the things people never do. Why, if I'm 100% owner, what did I bring to this company to be issued ownership? Is it time and service? Is it capital? What did I bring? And to add partners, you would sell shares.
Good stuff. Somebody asked, is there a way to avoid the high California registration fees other than leave California?
That's no and yes. If you're doing business in California, you're doing business in California, you're paying it. If you structure business that is not in California, that income's not subject to California if done properly. If you form a new business in California this year, you're not subject to the franchise tax fee. It's been waived for new businesses for this year and next year. So if you had a short-term play in California that you wanted to do something for a year or two and eliminate that $800, that's a great way. But if you're doing business in California, you're paying California taxes. Now, can you mitigate that, and reduce that? Yes, you can, but that's a lot more in-depth conversation, I think.
Right. I call it the good weather tax most of the time.
Yeah. If you look at it, most places that have good weather or have beachfront, right, have higher taxes.
Exactly.
Florida is an exception. Florida is still business friendly.
Yeah. Crystal asked a question. What's the best address to use when forming an LLC? Can I use a UPS box?
It depends on the state that you live in. Let's take California, for example. The address needs to be where you keep your corporate records. Now, does that mean people aren't using UPS boxes? No, people are using UPS boxes in California, but the statute says you must keep your records there. You're not keeping your records there. So would that be a weak link in your strategy? Yes, no, but you aren't following the letter of the law. Most states really don't care. Some states only want the registered address for the registered agent or commercial agent. The one advantage of using a UPS box is on states that post this stuff publicly, it keeps your home address off of record. Another big mistake we see is people act as their own registered agent. That's one of the most common mistakes we do. What address is usually on there? Your home address. A registered agent by statute is declaring that they're going to be at this address during working hours, normal working hours. So you can make an argument that we know normal working hours are Monday through Friday, at least 9 to 5, right? And if you're using your home address, you're not there Monday through Friday during those times. So if you are sued in an LLC or corporation, the registered agent is the person who accepts legal process. So it's not like an individual where you have a process server, chasing you around and you're ditching them in the neighborhood in your truck and you're hitting your garage door opener and hiding so they can't get you. They go to the registered agent. If the registered agent is not there, process server says nobody home or nobody at the office at this time. They go to the state, they drop the paperwork off at the state. The state will get you that paperwork on their good time. What's the response time for most lawsuits like that? Or you have to give an answer within 20 days would be a good average. The state is not going to get it to you 20 days. So no response after 20 days, you go to the judge and you ask for a default judgment. by the time you find out that you were sued, you have a default judgment. So having a professional or commercial registered agent, it's low cost. It's everybody should have one.
Yeah, exactly. Frank asked a question. What's the initial cost for corporate veil after year one?
After year one, it goes to $50 a month, or you can prepay for $4.95 for the year.
There you go. David asks, how do you feel about series LLCs like Texas has?
I like series LLCs in Texas if they're maintained by a professional who is an expert in maintaining a series LLCs. And you will find a few people in Texas that are very, very good at it. Series LLCs were very hot for about 1 year.
Yeah.
And now you have, and it changes. You have 6 to 8 states that recognize them now. So, you know, it went from like 24 down to 4, then back up to 8. And the problem with a series LLC is go ask 10 CPAs on how I should keep the records for this. Go ask 10 attorneys on how I should structure each sale, and you're going to get 10 different answers from everybody. So what is the real answer? That is my problem with series LLCs. It's why I've personally avoided them. Do we form them? If somebody wanted one, I would form one, but I would not maintain it. I wouldn't maintain it for you. There's no consistent answer to how are they properly structured. And I've probably seen more series LLCs pierced and all the cells be attacked than any other entity. But I'm not saying it's bad. It's just, if you do it, I mean, make sure you have somebody that really, really does understand it. And there are some people in Texas that truly do understand it.
Yeah. Then it's a different price if you're going to use the LLC with a corporate veil protection, correct? It's a different.
I won't do corporate veil for a series LLC.
Okay. That answers it right there. Yeah. Need somebody there locally to do it. All right, cool. For checkbook, who do you, what company does he recommend for checkbook LLCs?
I personally work with Specialized. I work with multiple ones, but I have a very good relationship with Specialized. Their answers, their strategies, their fees, I think, are competitive. I really like Specialized, but there's Horizon and there's others out there like that. It's just, I do checkbook or self-directed LLCs for multiple trust companies, but Specialized is kind of, I think, my preferred go-to. We can make an introduction on that behalf and kind of make it seamless if that's something somebody's looking at.
Sure, that looks good. One of the things, guys, I want to throw this out is if you get signed up for the corp veil protection, you're gonna get a phone call from Debbie or somebody over there who's going to walk you through. You're going to send you a form to fill out. What did you do this month with an LLC? It makes it really, really easy. It's a matter of, fact, sometimes it's so easy you forget about it. You need to go on there and do it. This is helpful just to make sure you're in compliance. You'd be surprised how many people I talk to that have never gotten the binder there. They just went out and formed it, the LLC to state, got a tax ID number, but they didn't issue themselves their own stock certificates or take notes or anything like that. And that's the beautiful thing about what you guys do is when you send this out, you literally schedule a phone call. Let's go through. Let's get these things tagged. Let's go ahead and fill this out. Let's issue your stock. Let's make sure you're a true entity, not just something that you thought of, right?
And we create the documents for you. All you have to do is communicate. We create them. We email them to you. You print out, sign it, and put it in your book. You lose it. You call us. Hey, I lost my record book. We have a copy of the records we created for you on file. And more importantly, in the beginning, what steps did you miss?
Right.
Here's one the other day. Do you have an EIN number? Yes, I do. What was the EIN apply under the LLC name? I don't know. I got this EIN 4 years ago. Well, this company was just formed last month. How did you get it? Well, I got it thinking I was going to do it, but I put it off for 4 years. Well, that EIN, you put on there the start date of when this company started doing business and the state it was formed in. So the EIN pre-existed this company by 4 years. You don't think that's a red flag? That those are the things that we can identify sometimes of finding those initial mistakes in there, or answering you'd be surprised. Are you member managed or manager managed? I don't know. Well, it makes a big difference because you have different roles, So, tracking that done and getting you straightened out so you are managing your company how you're supposed to. I mean, there's just a lot of little things that are found initially besides just keeping up the maintenance of it.
Mm-hmm. Got a question here for you. I'm in California, went to a webinar where they say to form an LLC in Wyoming to avoid FTB fees and utilize a trust for asset protection. I'm confused. Please help. I'm a newbie. That's what I would say is pick up the phone and schedule a phone call with that, right, Brent?
Call the number down there. There's, if you go look at Laughlin Associates, we're an A+ business rating. You're not going to find us on the rip-off reports. You're not going to find us in chat rooms of doing these crazy strategies. Now, is having a Wyoming company and a trust, can you avoid FTB in California on a rental property? Yes, you can. Okay. So that is the legal answer. So a domestic security trust typically would be used in California, and you can transfer title to a domestic security trust and not have your Prop 13 taxes reevaluated. A lender cannot deny you from doing that. And then the beneficiary is the Wyoming company. So yes, there are proper ways to do it. So it could be very legitimate. But I would look at the motive of it and then weigh, is potentially saving $800 worth it? But then you run into, if it's a rental property and rents are being collected, and we got this thing domiciled in Wyoming, are we subjecting now to have a Wyoming company registered in California because it's the beneficiary and pay the ultimate taxes or something? So there's, could be a lot more involved into, a little webinar, throwing some nice tidbits out there to try to get somebody to call you. I can tell you nobody on my staff will ever draw hundreds of circles or 20 circles to tell you this is where you need to start out. When we were in Austin last, I met with a gentleman that lived a little north from Austin, that guy that had the ranch. Yep. He went to one of these companies, and I want to say at the time he was dabbling, just getting started in notes. He had one operating business on the ranch. They sold him 3 family limited partnerships, a land trust, and 6 entities. And we went in there and eliminated all of that, kept him with the one entity for the notes, the one for the operating business, saved him, thousands of dollars a year in maintenance and stuff like that. It wasn't necessary. We want you to send your friends. We want you to stay with us long term. I don't want somebody who just wants to come in, form an entity, not take it serious, and go do something. My staff, if I find somebody overselling or trying to make something overcomplicated, we'll eliminate them on the spot. I mean, if I see something out like that come from any of my staff, they would be removed on the spot. It's not how you stay in business for 50 years doing stuff like that.
Amen to that. Amen to that. What other questions do you guys have? You got 100,000 plus business entities structured, created, helped out there for you. I mean, you're on a wealth of information here at your fingertips. Now's the time to ask the questions. How far back will you go with the corporate bail protection? I don't know if people realize, if you mentioned that before, how many years will you guys go back with your the corp bail?
I'll go back 100 years if you want me to. So 995 goes back 5 years. If we're on the borderline, you're at 6 years. I'm not going to penalize you and stuff like that. But if you have a 10-year-old company, 15-year-old company, for $14.95, we would go back for an additional $500. We'd go back 15 years if necessary.
How many of you have an old LLC sitting on? Come on, everybody. Everybody's got one that's been sitting around, they've not taken care of. Now's the time to do it if you want to use it. Otherwise, shut the thing down. Start.
And again, if you want to, talk about how to plan for future growth, so you know what to do, call the number. If you have more than just one entity, you know, and you want to know, what do I do? Call the number. If you've made it, you've built your wealth, and you want to know how to protect it, call the number. Kevin Day on his that's going to be next. He's going to go into that. We provide the pieces to that. Kevin does the legal work on that. You have the founding father of the trusts that are being used for these types of strategy going to speak with you guys next. And Kevin is somebody that he doesn't pick up the phone free and talk to you like I will. That's somebody, if he picks up the phone, you're being billed $700 an hour. So the knowledge you're going to get from Kevin coming up, it's from the founding father of setting some of this stuff up. So if you've already made it and you're there, or you have considerable assets to protect, that you think you'll really enjoy the next session.
Yeah, that's why we made it back to back. It worked out really well.
Yeah, I was bummed out I didn't get to do the Rockefeller. I even went and got my hair cut today thinking I was going to do the Rockefeller. And
What'd you do? You pull out a pair of scissors and clump off one? That's good stuff there. Well, Brett, thank you so much, guys. Take advantage at corpveilprotection.com. The great things, if you do the monthly payments on that aspect, they'll report credit bureau, so you start building some business credit there for you while you get rock and roll for your LLC and stuff like that. So some great ways there for you guys to really do some great stuff and expand your business, get things rock and roll. Look, you don't want to be up at night worrying about what you didn't do. And one of the best things I will always say, I have never regretted paying money for asset protection.
And you're never too small to form an LLC or a corporation. That's a misnomer. If you're dealing with the public or your financial dealings with others out there, you have stepped into the realm. You should have something.
Yeah, exactly. Especially don't be doing anything in your own name, your DBA. That's a recipe for getting sued and a recipe for losing a lot of stuff really fast. So good stuff. Brent, let me get another question, comment from somebody on here. Does that cover people living in Canada doing business in the USA? Leanna says, or asked a question.
So do we set up U.S. companies for Canadian citizens?
Yeah.
Yes, we do.
Yeah.
There's some challenges, but a Canadian citizen can own a U.S. company. That's the easy part. We can get a tax ID for the company. That's the easy part. Banking is a little different from a Canadian citizen, but yes, we have a lot of Canadian citizens. More and more since COVID, actually, we have a lot of Canadians jumping and trying to do business in the U.S., either real estate notes or even moving some operating, branching out their Canadian business to hit the U.S. market. So.
Yeah, exactly. I mean, we've got quite a few foreign investors, especially Canadian investors, doing stuff here in the United States. Got quite a few students. They've set up with you guys and love it. Question is this: she'll reach out to you guys. Good. Don't write that number down. 1-800-648-0966. Monday through Friday. There's somebody in the office there in Reno. Somebody to help answer your questions. It may be Brett, it may be somebody else there. But trust me, one of the things we talked about big is that you guys, it's a nationwide network of people here. Brett and Laughlin and Aaron Young and Megan Cole and everybody over there at Laughlin are part of our trusted advisors, people we reach out to for questions, and you're in good hands with Brent. So take the opportunity. Brent, man, hope you have a great rest of your Friday. Got big plans this weekend?
Nothing really big. We'll probably hit Tahoe, have some Mai Tais on the beach up there. It's supposed to be like 89 degrees in Tahoe, crystal clear water. Maybe migrate down and do some fly fishing, the next day. So
there you go. Good stuff.
Enjoy summer before winter comes.
Yeah, exactly. Well, hey, buddy, it was great seeing you in Denver a few weeks back. Look forward to seeing you again sometime soon, buddy.
Okay. Thank you for having me.
Thanks, bud. All right.
Bye.